Thinking about applying for a home loan, but you are stuck with a big question. Should you go directly to your bank or should you use a bond originator? Well, choosing the wrong option could cost you thousands over the years. So let's break down the pros and the cons of both options so you can make the best choice for your home loan. Option one, applying directly with your bank. This means going to your bank where they will assess your financials, your credit score. They will offer you a home loan deal, including your interest rate and the loan term, right? So, in terms of the pros, you might get a loyalty discount if you have banked with the bank for many, many years, right? You control the process and talk directly to your banker. Some people feel more comfortable dealing with their own bank. I think it's only normal that we become comfortable in familiar environments, right? But in terms of the cons, you only get one offer, no shopping around. I repeat, one offer, no shopping around. If your bank doesn't approve you, you have to start over. You need to go look at another bank, right? And if that other bank doesn't approve you, you need to start all over again. So start all over again. So a hell lot of admin, right? You might not get the best interest rate available in the market because what you don't have a comparison. You're only having looking at one offer. So if it's the most terrible offer, you will not even know because you don't have comparison. So let's go to the second option, which is applying through the bond originator. So a bond originator is basically a middleman who applies for a home loan on your behalf to multiple banks at once, right? It's very much important to understand multiple banks at once. So it means if it's in South Africa, they will apply to Standard Bank, SA Home Loan, ABSA, Nedbank, right? Did I miss another one? FNB, all right? It's not in a particular order, right? There's no bank that is more important than the other in this sequence. I'm just mentioning banks, right? And in terms of the pros, you have more choices. They apply to several banks for you. Lower interest rates since banks compete for your business, right? And in most cases, your bank that you bank with normally wins because if another bank gives you a better offer there, you have the negotiating ability to present that offer to your bank, and your bank 100% of the time, from my experience on all the deals I've made, they will beat that offer, right? So your bank wins and you win, right? Because now you'll be paying much lesser and you know for sure that that is the best interest rate you can get. You also have a high chances of approval. If one bank says no, another might say yes. It's free for you. The banks pay the bond originator, not you. You don't have to worry about paying the bond originator because when I talk to my clients, some of them, they highly recommend their bankers, right? And they think that they have to pay the bond originators, right? So there's less stress for you. They handle all the paperwork and all the negotiations on your behalf. The cons are you don't have direct contact with the bank until the loan is approved. Some banks might offer exclusive deals only to direct clients, right? Now, the big question, which of the two options is better, right? If you want the best interest rate, more options, less admin, a bond originator is your best bet. But if you trust your bank and prefer direct relationship, applying through your banker could work for you. But in my experience, I will only advise people that work for the bank because either way, there's no other bank that can give them the best rate than the bank they work for. So I will only recommend option one for employees of banks. Everybody else, I'll say go the bond originator route. But it's your decision, right? Would you go directly to the bank or would you use a bond originator? Let me know in the comment section. I want to hear your thoughts on this, right? Because you make a wrong decision here, it will cost you. It will cost you. And remember, a bond is like 20 years, right? Some people take 25 years, some take 30 years. Now imagine this is a long-term cost that you're going to carry for the rest of that loan term. As always, guys, Don't forget to like and subscribe and hit the bell for more buying tips or financial advices and real estate advices. As always, your host, the big elephant, Ndou Khulu Ya. Cheers. I will see you on the next one.